2 weeks before Silicon Valley Bank collapsed, the CEO sold $3.6 million in company shares. He knew something was about to go down and told no one. And 2 weeks later, it happened. March 8, 2023. Tweets, DMs, text messages, and emails were flying around the startup community in America. And all these startup people were telling each other one thing: get your money out of Silicon Valley Bank. And then the very next morning, it happened. Silicon Valley Bank, the 16th largest bank in America, imploded. Financial regulators have closed Silicon Valley Bank and taken control of its deposits, the FDIC announced Friday, in what is the largest US bank failure since the global financial crisis more than a decade ago. SVB, the 16th largest bank in the US at the start of last week, has been operational for 40 years and was considered a reliable source of funding for tech startups and venture capital firms. And it all collapsed in less than 48 hours. And with 2 more recent bank failures, with Silvergate Bank and Synergis Bank, it looks like the US banking system is burning down right in front of our eyes. It looks like this might be the big one, and no one is covering the real reason why this collapse is happening. As you guys can imagine, researching these videos takes me to some pretty dark corners of the internet. That is why I use this app called Aura to protect myself. Aura is a sponsor of this video, and Aura is this easy-to-use app that includes everything you need to stay safe online. It protects you from financial fraud, identity theft protection, it comes with a VPN, antivirus software, and even a password manager. One great feature of Aura is that it gives you near real-time alerts on suspicious credit inquiries, like if someone is trying to get a loan or a credit card in your name. But my favorite feature of Aura is that it will constantly watch out for your email, social security number, and passwords getting leaked on the dark web. Like this email I got last month about how my information was leaked on the dark web multiple times. Before Aura, I had to pay for a lot of these services separately, but now all of this is included in one affordable subscription. The amount of money lost to digital crime has more than doubled since 2017 alone, so cybercrime is no joke. You want to get protected. And Aura is so confident that they even offer $1 million in coverage to cover eligible losses and fees due to identity theft. And they even have a 60-day money-back guarantee. All you gotta do is choose a plan with the link below, then set up your account to activate your protection, and then you'll get notified with any crucial alerts. And if you sign up right now with the link below at aura.com/Jake, Aura will give you a 14-day free trial. And you will be shocked at just how much of your personal information Aura finds exposed in just those 2 weeks. So pause the video and go to aura.com/Jake to get protected now. See, when startups get money from funding, they can't just go to normal banks and put their money there. Normal banks want real businesses with long, stable transaction histories. They don't want brand new businesses that are constantly moving millions in and out all the time. And because of that, startups had nowhere to bank, and Silicon Valley Bank filled that void. SVB was specifically catered towards the volatile world of tech startups, and it gained them a monopoly on the space. Just signed a fat Series A, put the money in SVB. That was the standard, and SVB became Silicon Valley's go-to bank. So when there was easy money flying around everywhere during the pandemic, tech startups were getting insane amounts of funding, and they deposited all that money into Silicon Valley Bank. SVB was suddenly seeing a lot of money flowing into its accounts. In just 1 year, SVB saw a 100% increase in the amount of money deposited into its accounts. In 2018, SVB had $49 billion in deposits. By the end of 2020, that number had doubled to $102 billion. And by 2021, the bank was holding over $189 billion. And with all that money in the bank, SVB decided it was time to put that money to work, which is when it decided to buy billions of dollars worth of investments with their customers' deposits. In their eyes, why wouldn't they? Cash is trash, remember? We gotta invest these deposits. This is how banks make money. But it's a delicate balance. As a bank, you have to have enough cash on hand in case people want to withdraw money, just so there's not a bank run. But SVB didn't care about any of that. SVB bought $117 billion worth of mortgage-backed securities and 10-year treasury bonds that had an interest rate of only around 1.5%. But in March 2022, the Fed started raising interest rates, so the value of the bonds SVB bought started to fall. As interest rates rose sharply and the bond market cratered in 2022, SVB's bond portfolio took a huge hit. Because why would anyone buy SVB's 1.5% bonds when there were 5% bonds you could buy, for example? Now, this would be fine and all if SVB didn't need to sell those bonds for a loss, but as rates went up, the money supply started shrinking. There was no more money flying around everywhere like crazy, so funding for tech companies started to slow down too. So these startups started withdrawing their money. As economic conditions soured over the last year, with tech companies particularly affected, many of the bank's customers started drawing on their deposits. SVB didn't have enough cash on hand, so it started selling some of its bonds at steep losses. With more tech companies needing the money in their accounts, SVB was suddenly running out of cash on hand to keep up with the withdrawals. So they had to sell those 1.5% bonds at a loss. So on Wednesday, March 8th, SVB made a startling statement. SVB announced it had sold $21 billion worth of its securities at a roughly $1.8 billion loss, and said it needed to raise $2.25 billion to meet clients' withdrawal needs and fund new lending. They thought no one would care. It was just a measly $1.8 billion loss. They thought they could easily get the funding to cover it. They were one of the largest banks in America after all. Our depositors aren't gonna take their money out. They have nowhere else to go. But SVB was in for a rude awakening. Venture capital firms on both sides of the Atlantic urged their portfolio companies to move money out of embattled lender Silicon Valley Bank, and that's when the bank run happened. Suddenly, everyone wanted their money out of SVB. Everyone in the tech industry was telling their friends and colleagues to get their money out as quickly as possible. Within a day, SVB stock had tanked 60% and led to a loss of more than $80 billion in bank shares globally. With SVB employees receiving their annual bonuses on Friday just hours before regulators seized the failing bank. The next day, the 16th largest bank in America was no more, all in the span of 48 hours. But the real question is, why did SVB do something so insanely stupid? Every single banker knows when interest rates go down to zero, they're eventually gonna go back up. And when they go back up, your measly 1.5% bonds are gonna tank. It was inevitable. And yet SVB still bought the bonds. Why? Because they thought they were invincible. No one was gonna withdraw their money. Where else would these startups go? We have a complete monopoly over the industry, for God's sake. None of these VCs and startups would be welcome at normal banks, so there was no need to worry. Just like every bank that collapsed before it, SVB believed it was just too big to fail. And now, their depositors were screwed. Although SVB accounts were FDIC insured, FDIC only covers the first $250,000 in a bank account, which is a problem because all these startups have millions in the bank from their venture capital funding, which is why only 11% of the money deposited at SVB was actually insured. Companies such as video game maker Roblox and streaming device maker Roku said they had hundreds of millions of dollars in deposits at the bank. Roku said its deposits with SVB were largely uninsured, setting its shares down 10% in extended trading. But after a few days of panic, the government stepped in. The government is not saving SVB, it will stay collapsed, or wound up with remaining assets dispersed to creditors, unless a buyer can bring it back to life. However, late on Sunday, US agencies extended a guarantee to cover all deposits at the bank. It means customers at SVB will be able to access all their money on Monday morning. Or in other words, you're bailing out these rich venture capitalists with your tax dollars, hooray! To be honest, it would have been nice to see SVB not get bailed out. It's easy to feel bad for these startups, but think about it. This wasn't their money they were losing, it was money given to them by rich venture capitalists to fuel their giant Ponzi scheme that is Silicon Valley. And if you want to learn how the world really works and why the elite stay on top like this, click the square on the screen to watch our full video on it right now. Click the square on the screen to watch now.